Welcome everyone to our most recent event of Asian Investors Network. We created this group to provide a platform for investors in the Asian community to come together and succeed and prosper together. So we're very excited to see our growth over the past few months. We just started in March of 2020, and we've already grown to about 3,000 plus members. So tonight, we're happy to discuss the Angel Investment Syndicate with our great moderator, Prasant, and our guest speaker, Matt. Why don't you take it away, Prasant?
Thank you. So first of all, Matt, really grateful you can make it and glad we could get together again after. So just to give you a background, I know Matt through a course we took early in the summer. It's called Venture Deals, and it's conducted by Brad Fells. So that's how we got to know each other. But yeah, thank you so much, Matt.
Pleasure. Thanks for having me.
Great. So okay, I'll get straight into it. So I think we'll keep it to about 15 to 20 minutes of questions, and then maybe we can open it up to members attending. So to start with, could you tell us about your background in investing and how you got into it?
Yeah, no problem. Yeah, I've been an investor since I was a kid. Actually, when I was 14, I started trading stocks through my father's brokerage account. So back when Nortel was the big deal here in Canada.
Oh yeah.
But yeah, just I got into stocks. I was pretty fortunate at a young age. My grandmother, she was big into stocks as well, so she introduced me to things and really gave me that financial education early. And then throughout my teens and my 20s, I did the entrepreneur thing. I lived in Toronto for about 10 years. I worked predominantly sales and marketing in the CPG world. I worked for Nestle and Coca-Cola, and then that ultimately led to my former business partner and I spinning out a CPG startup. So we grew and scaled that for a number of years, had an opportunity to exit the business. And it was at that time in around 2012, I ended up moving out west. And that's where I live now, Western Canada in Calgary, just next to the Rocky Mountains. And yeah, when I got here, I wanted a way to stay connected to the startup community. So I discovered angel investing and just, started writing small checks and making some early investments. I tried to join every angel syndicate I could, every possible VC fund. And here in Western Canada at the time, there really wasn't much VC activity. So I essentially took my investor education and focused on more established markets like Silicon Valley and New York and Toronto and Chicago. So I was able to get into some interesting deals early on, learned from some really, really great people. And yeah, essentially crafted my own apprenticeship through writing checks and slowly building my experience over time. And then that ultimately grew into scouting for a couple different VCs and some syndicate leads that I was an LP with. And then my eventual goal was to one day launch an angel syndicate based here in Western Canada, which I've done over the past 6 months or so. We had our official last month in October, but I've been sort of building out this model for about 6 months now.
Awesome. I think that's a great segue into my kind of next topic or question, but you did mention that it's your allied VCs focus on Western Canada's tech ecosystem. So is there a reason why, of course, you live there, but beyond that, is it because you think there aren't many investors focused there, or you think you have some kind of advantage there? Would love to hear your thoughts on that.
Yeah, it's interesting. Like when I moved out here, there really wasn't much VC activity going on, right? So, but over the last 8 or so years, the government has really put a lot of money into, because historically, if you're not familiar with Canada, Western Canada is the oil and gas capital. So it's been our energy capital for many decades now. And I mean, you now actively have the entire world trying to reduce their dependence on oil, right? So we have the highest concentration of accredited investors in Canada. Everyone has made a ton of money off of oil and gas, but they understand that it's not the way of the future. It's not what's going to drive this local economy forward for the next 10, 20 years. So we have this investor pool that's really wealthy and they want to invest in emerging technology and innovation, but they don't know how. So, I mean, they just want to invest in what they know, right? Which is oil and gas. But And then on the flip side, we also have a lot of tech talent. We actually have one of the highest concentrations of tech talent in Canada. So we have a lot of really interesting technology startups coming up, but they're consistently stuck pitching the same pool of local oil and gas investors who don't really understand what they're talking about. I mean, they don't know how to assess a technology company, what metrics to look for, what makes a good investment. So we kind of have this stalemate in our local market where local investors, they want more access to diversified deal flow. Like they want to get in on the next Uber or Facebook or big, tech company from the States. And then we have local entrepreneurs who want experienced outside capital, established technology investors from those markets to come in and invest locally here. So that's why I created this syndicate to sort of bridge that gap and do two-way deal flow. So even though we are based here in Western Canada, we are looking to make investments across North America and eventually globally as well. So, because we want to bring in, really attractive investment opportunities from the Valley, from New York, from Chicago, for local investors here who've got a ton of money. And then we also want to do that the other way as well, bring in experienced technology capital into the region.
Oh, that's, really interesting, because a couple of years ago, like when I was in Toronto, so like I was attending this talk and some investors were chatting about how, at least back then, that they'd got to a point where Toronto based, or at least in that, startups in that region no longer had to go to America to fundraise, and they had a strong local ecosystem. So do you think you're there already, or is it, is it work in progress?
Mm-hmm. Yeah, it's definitely a work in progress. It's come a long way in the last 8 years since I've been here, but really, it's I kind of see these market forces coming together, and it really hasn't fully collided yet, but I can see it getting closer and closer. So I really strongly feel that we're going to be the next big startup hub here in Canada. Because, like you said, Toronto, Waterloo. I mean, they had BlackBerry. They're famous for quite a few companies. Shopify came out of Ottawa, which is my hometown. So like Eastern Canada, they have a long-standing reputation. But here in Western Canada, like I said, we have so much money that's floating around from 3 decades of oil and gas exploration. So now they're looking to put that to work. And, it's a lower cost of living. I mean, if you look at the Valley, I mean, you can now hire a developer in Canada and probably pay 30 to 50% less, because not only the favorable exchange rate, but the lower cost of living, right? So I think, especially now with COVID, things have accelerated the acceptance of remote work and distributed teams. And I think Western Canada is uniquely positioned to benefit from that.
Yeah, absolutely. I agree. But I mean, in terms of, I think someone's, could just someone's, I'm going to mute someone. All right. Thank you for that. Yeah. Okay. So, I was going to say, so my next question was mostly about how you compete. So looks like it may not be as much of a problem in your region because, like you said, most investors are transitioning away from oil and gas to new asset classes, but you also mentioned you're looking at deals outside Canada. So how do you see yourself positioning in terms of like competing for deals and making sure you get allocations and so on?
Mm-hmm. Yeah, I'm a big fan of the syndicate model. I mean, the syndicate right now, just since we launched last month, we have 82 members in the syndicate, and it's largely people that I've just met through angel investing over the last 8 years. And they're from all over the US, across Canada, some in the UK, and some in Asia as well. There's a few in Hong Kong, Singapore, Australia. So my big value proposition to founders is, I mean, you can go out and take a check from a VC firm, and the LPs behind that firm are going to be some family offices and maybe a couple pension funds or college funds, endowments. But when you invest with a syndicate, I mean, we have dozens of people with expertise ranging from pretty much every industry. And if the founder needs help with sales or marketing, or they just want to jump on a Zoom call for 30 minutes and talk with someone who might have experience, I mean, we're absolutely happy to leverage that network, send a message out to our LP base and ask, can anyone spare 30 minutes and talk to this founder, maybe help them out. Just last week, for example, I was talking with a company that's doing broadband internet. And then one of my LPs is actually a former VP at Comcast. So, I mean, talk about a great guy to pick his brain with and just, bounce ideas off of. So for me, that's how I value or push our value proposition, is that we have this really diverse network of LPs that will step up to the plate and help, at an operations level, if need be, by the founder.
Yeah, that's amazing, because I personally, for us, when we raise capital, like some of the most valued investors were the ones who had insights into the industry. So I'm sure your, investees really appreciate that. But I mean, that brings an interesting point, because like you mentioned a syndicate versus a fund, but then was there a reason you did not explore setting up your own fund, or you did have the syndicate, or do you think the syndicate is a stepping stone into a fund in the future? How do you see this progressing?
Yeah, personally, I've always said to myself that I really have no interest in managing and being responsible for other people's money. Out of university, back in my 20s, I had an opportunity to work at a trading firm, and I ended up turning it down because I just didn't want to do that. I much more prefer the syndicate model, and I think I'll stick with the syndicate model, just because, personally, as an investor, I like to be more active and involved in deals. I like to see the deal flow, opt in or out on a deal by deal basis, and really do my own diligence and do some research. I'm definitely not a passive investor. And I mean, VC funds are great for those who just want to cut a check and get a quarterly update or an annual update. But I think for me, like especially the LPs that I'm seeing that are joining my syndicate now are fellow active investors that really want to get involved. So, and then, they get to choose on a deal by deal basis, right? So it's not up to me. I can tell them why I'm investing, why I like this company, and then they have that decision power, right? So it's still on them at the end of the day. But and then even now, I mean, I talked to some people that are trying to raise VC funds in the world of COVID, and it's incredibly difficult. You're constantly out there sort of doing the dog and pony show, dancing for LPs and trying to get them in and competing with other VC firms. Like, it's a very, very difficult process, especially to raise a first time fund. So I don't see myself doing the fund thing, at least not anytime soon, but at least the syndicate is a great way to sort of build that track record and maybe get introductions to some of those larger LPs. So, down the road, if there is an opportunity, perhaps, but I think I'll stick with the syndicate model. I much prefer that.
Yeah, it makes sense. I think especially the management part, I think that's where people underestimate the amount of effort it takes, right? Because it's not just allocating capital, it's also managing your LPs.
Yeah.
Like,
well, there's so many restrictions, right? I mean, you look at, there's vice clauses, and you can't invest in this, or you have to invest in that, and you have to do so many investments per year. And with the syndicate, really, there's so much more flexibility. I mean, the LPs, that they decide on a deal by deal basis, so they don't, we're not stuck operating under these very strict rules. So, and I think too, like we saw with WeWork and SoftBank over the last couple of years, I think not every VC firm, but there's certain VC firms that I think, they're starting to focus more on just raising larger and larger funds. And it kind of makes you wonder what business are they in, because, a 2% annual management fee on a $1 billion fund, that's a nice little paycheck. So are they in the business of raising larger funds? Are they in the business of really supporting founders at a strategic and operational level to really grow these companies and reach profitability? And I think that's something we saw as well with Uber, is a great example, that finally hit the public markets, and the reception was really, really poor. And public market investors, they want to see that, strong unit economics and that path to profitability. And that's something that Uber has struggled with. So it's an interesting landscape right now.
Absolutely, I agree. Because, I mean, there's this constant pressure to, like, you raise fund 1, and then by year 4 you're raising fund 2, and so on. It's like almost like a Ponzi scheme, but I kind of hesitate to use that term. But So
it can be for sure.
yeah, definitely. But in terms of the mechanics itself, you did opt for AngelList, and I mean, is that because it's a default option, or did you explore something else? Like, is there even something else out there? I mean, I've not heard of anything aside from AngelList being used for syndicates for a long time.
Yeah, I mean, I have a personal familiarity with the platform. I've been using it for close to 10 years now. But that being aside, I did spend about a month and a half researching other platforms and meeting with other platforms. Another really good one is called Assure.co. They do syndicates and SPVs. But yeah, AngelList is really, it's the largest ecosystem in terms of having LPs and founders all on the same platform. And especially, you know, when you're trying to gain traction from LPs and make introductions and network with other people, I think you want to be in the biggest ecosystem possible. And AngelList just has the numbers, right? They're the largest ecosystem going right now. So it's a platform I wanted to leverage just because I feel like it would streamline a lot of things and make things move much, much faster. And then on the back end as well, I mean, the administrative support that they offer in terms of, you know, collecting the funds, wiring the money, finalizing the contracts, it's just, it's so streamlined and seamless. I mean, it's truly a world-class product. So, but I did research other products, and I did come back to AngelList.
Yeah, in fact, you mentioned Assure, and turns out, to the best of my knowledge, I think they're the back end of AngelList as well. So
that's how they started. Yeah, they started by running the back end of AngelList, and then in the last couple of years, they've sort of branched out to do their own. But then again, they don't have sort of the social network aspect. It's just
right.
straight SPVs, right? So whereas AngelList, you can, you know, connect with founders, connect with other LPs. So it's just a larger ecosystem.
Yeah, makes sense. Also, you've been involved in many deals over the years. So what are some of your best and worst deals you've been part of?
Yeah, I was kind of lucky because when I started coming from a background of public markets, angel investing is such a higher risk world. So I really wanted to de-risk as much as possible. So I actually spent about 2 years just observing and learning before I actually wrote my first check. And then I chose to, when I first started, I chose to focus more on the growth end of the investment spectrum. So I joined some later stage syndicates and some later stage VC funds. I was actually able to get in. The first check I wrote was the Series B round in Pinterest, and that one turned out quite well. And then the second check I actually ended up writing was also a Series B in Lyft, and that worked out well as well. But my eventual goal was to always get back to that, you know, pre-seed stage, which is where we are now, as my experience and knowledge grew, and I had the confidence to do so because, you know, as an entrepreneur at heart, that's really where my passion lies, is, you know, those early days, living on ramen noodles and fighting for those first customers and getting your first check in the bank. Like that's where the true excitement and passion is for me.
Yeah, totally. And I mean, any kind of pitfalls you would advise against one while investing or running a syndicate and so on?
Mm-hmm. Well, in terms of, sorry, just to answer your second part of the question there, in terms of investments, like bad investments, thankfully I haven't had any that have really blown up yet. I mean, I know the odds are that there will be some that do, but I did have an opportunity to invest in Spotify at one point, and I turned it down just because I just didn't see them. I didn't see them, you know, becoming what they were. I was like, well, do I really want to compete with Apple Music? And then at the time, Jay-Z and Tidal were just starting to come onto the market. So I said, yeah, I don't know if these guys from Europe can pull it off. And then sure enough, here we are. And then they did a direct listing a couple of years ago, and it was a great success story. So I guess that's one that I totally read wrong. But what are you going to do? Can't win them all.
Yeah, exactly. I mean, for me, it's very interesting that I think it's Bessemer that maintains this anti-portfolio that you can, it's a very, very public, like mea culpa, that, hey, these are the ones we did not invest in, and Facebook is one of them, right? Because apparently they turned down Facebook really early on, and a few other really interesting names. So that's always good. But in terms of, say, like technologies itself or any kind of sectors, do you have any thoughts on both, like what's happening in Western Canada and overall the larger perspective as well, especially due to COVID?
Yeah. Yeah, I think some of the really interesting stuff that I've been looking at over the past, since COVID started, it's really the industries or the founders that have been able to, either ride the coattails of this and really, use it as a springboard to improve their growth, or who've been able to creatively pivot and be able to now actually grow their company off of this new COVID norm that we have. So I think it's really interesting. I think remote education, and ed tech is a big one right now. Anything that makes education more accessible and cheaper for people. I mean, you look at a lot of the economic issues in the world, it really comes down to education. And if people have more education, and maybe it's financial education or whatever, they can make better decisions and improve their quality of life. So that's a big one right now. I know fintech is big right now as well. I think we're going to see some disruption there, potentially as well around blockchain. We'll see how that goes, just with everything that's going on with, devaluing currencies and pumping so much stimulus into global economies right now. And then here in Western Canada, we're also the ag tech capital of the country. So I think agricultural technology is going to be ripe for disruption here, because, I mean, we only have so much space on this planet, and we can't just keep building farms and chopping down trees. So an area that's really interesting to me right now is sort of the cell-based meat and the bioengineered. I think that's really interesting. There's some companies that are getting really, really close to having the taste and the texture and everything just perfect, to the point where they can, grow a steak in a lab and you wouldn't even tell the difference. And the price point is really starting to come down as well, to where it can compete with traditional meat. And then also, I was looking at a company a couple weeks ago that apparently one of the biggest methane producers in the world is cows. It's cow farts. So and that's what's leading, really, contributing to global warming. So there was a company I was looking at last week that they've developed essentially a probiotic for cows that makes them produce 38% less methane. So I mean, that's super interesting as well. So I think, education, remote education, anything remote, and then, agricultural, food chain, keeping our food supply secure and stuff like that. I think that's really interesting.
Absolutely. No, it makes lots of sense, especially with everything that's going on. And one final question from me before we open it up to other people is basically, so you mentioned you had a couple of exits, but also I think there's been a shift recently in terms of, like, so at least when Uber was around, the whole premise almost was that, like, hey, we probably never will have to like IPO, because we can just extend this forever and ever. But now there seems to be a shift in that preference. So people are, like, investors are pushing for IPOs. And there's also a whole, like, range of SPACs coming in. So what are your thoughts on that? And do you have a preference per se? And or would you rather like have an early exit, like early IPO, or would you rather delay that? And, like, how do you see this?
Yeah, no, I think it's super interesting what's going on with SPACs right now. I mean, I think we're going to see the timeline from companies reaching the public markets, which is now typically 7 to 10 years, now going down to maybe 5 to 7, just because it's easier to get there. But as an investor, absolutely. I mean, hitting IPO is like the holy grail. It's what every founder and investor dreams of. But I think, it's not the be all end all. I mean, there's a lot of big acquisitions going on out there right now. So, I mean, if the company continues to grow, if they want to keep it private, but I think like what Chamath is doing with SPACs, he's really raised the profile, and they're not really considered sort of this shady backroom dealing anymore. He's really sort of elevated the process and really made it a quality process. So I think it's going to be it's going to be interesting. We're going to see more and more companies go public, I think, over the next 12 to 24 months through a SPAC.
Yeah, it seems to be really heating up, right, the market. I mean, and you're right, like Chamath has really raised the profile for SPACs. Like the whole blank check company thing is coming up to be really interesting. So,
And
yeah.
even direct listings as well, like just like Spotify did, and there's been some other
Mhm.
companies that have done the direct listing thing. I think that's great as well, because then you're not just lining the pockets of the big investment banks, and it's yeah, it's good. It's good for everything.
That's right. And I was just reading yesterday, I think, I'm not sure if it's a direct listing, but Airbnb is like, I just read the headlines that they've selected NASDAQ. So I wonder who's involved in the deal, but that should be a big one.
Yeah, I'm not too sure actually. I got to catch up on my news, but yeah, that'll be interesting because obviously they've been slammed over the last 8 months because of COVID, and it'll be interesting to see how public markets. I mean, public markets are going to have to bet like that the world travel industry is going to come back because as
Yeah.
of right now, Airbnb is probably not looking like a very attractive investment. But then again, COVID's not going to last forever, so.
True. I think the whole travel industry is really taking a beating because like air travel's down, like hotels, Airbnb. Yeah, it's going to be tough, like couple of quarters at least.
Oh yeah, yeah. I think we'll see some continued consolidation in the travel industry, whether it's hotel chains or airlines. I was actually looking at investing in just on the public markets, looking at the airlines ETF, the Jets one that's listed
All right.
in the States, and it sounds interesting. It's tempting, because air travel will come back within 3 to 5 years. I'm convinced, but I don't know what that's going to look like in terms of which companies are still around, and so I don't know. It's a gamble right now.
True. I mean, yeah, no one knows how further these balance sheets can sustain, right? So
Yeah. Yeah, and what the government stimulus looks like if the government's going to keep stepping up and helping these companies out. So otherwise, we're going to see a lot of bankruptcies.
I agree. Yeah, it's up in the air right now. But Matt, thank you so much. Those are the questions from me. Maybe we can open it up to a few people. And yeah, do we have any questions for Matt?
I think there was some in the chat.
Oh, I see a couple of them. So the first one seems to be, all right, do you follow on your investments made through a syndicate? Like,
Gotcha. Yeah, absolutely. So like one of my part of my thesis is that when we do an investment, we want to make sure we get pro rata rights, because personally I believe you really have to do well at angel investing. You have to take a portfolio approach, and that means placing a lot of smaller bets early on and then doubling and tripling down on the winners as they start to break out. So absolutely, I think that's one of the mistakes that a lot of new angel investors will make is they'll go out and they'll make a couple large investments. They won't really save any money for follow-on rounds, and then odds are that all the investments go bust because I mean, just it's a numbers game, right? You have approximately 70% of startups that go to zero, and then 10 to 15% that maybe break even, and then really 3 to 5% that can return the entire portfolio. So you really have to place a lot of small bets early and then double down as you go as those companies start to break out. So absolutely, you definitely want to participate in follow-on rounds.
absolutely. And in fact, even from an academic angle, that's something we studied over the summer, the whole pro rata rights and liquidation preferences and all that. So yeah, very interesting. I think we have someone else raising a hand. Is it Chris?
Yeah. Can you hear me okay?
I can, yes.
Yes.
Perfect. Thanks for taking the time to do this. I think it's interesting seeing Canada as an emerging startup and kind of venture ecosystem. So thank you for kind of being a leader in the space. Kind of two questions. One, how are you thinking about sourcing deal flow? Do you kind of have like a proprietary pipeline that you're tapping into, or are you just kind of crowdsourcing deal flow from your network? And two, you mentioned ag tech. What would you say is Canada's kind of competitive advantage in the ag tech space in terms of kind of the tech transfer and research process? Being a UC alum, I think we've got some competition there for sure. But I'd be curious to get your insight on that.
Yeah, no, thanks for the questions. Yeah, the first one with regards to sourcing. So right now it's a bit of a mix between people that I have in my network already, as well as doing some direct outreach. I mean, especially now in the world of COVID, we're seeing so many conferences and demo days go online. So it's really, that was part of the reason too why I decided to launch the syndicate now, is because COVID has really made it possible to do that remotely. For example, back in September, I attended a conference in Chicago that I probably otherwise would have not gone to. And I ended up meeting with 36 founders over 3 days. So thanks to this new, remote norm, it's really allowed me to sort of improve my deal flow that way. But yeah, I get a lot of inbound deals from people in my network that they've met a founder, or maybe it's another syndicate lead and they want to co-syndicate something. So yeah, it's a bit of a blend in that regard. As for ag tech, yeah, Canada's got some interesting stuff going on right now. I think one of the big things that we're working on is improving crop yields, and really getting more out of what the farmers are planting each year, and really maximizing those yields, as well as, because here it's so cold so many months of the year, they're doing some really incredible things with indoor and vertical farming. And right now, where we are in Calgary, which is the oil and gas capital, we do have a pretty scary 30% downtown office vacancy rate. So there's a lot of skyscrapers sitting empty right now. And there's actually ideas floating around about potentially repurposing some of them for vertical farming initiatives. So I think that's really interesting. And then, yeah, as you probably heard, we do have legalized cannabis here at the national level. So there's a lot of indoor growing and stuff going on there, which is pretty interesting as well. So yeah, I think that's kind of what our strong points are.
Hey Matt, this is Helene here. I had 2 questions.
Sure.
The first one is around liquidity. So now secondaries are getting more popular and more firms are becoming registering as investment advisors. Do you have a specific liquidity strategy prior to an IPO acquisition? For example, selling on a pre-seed deal to Series A, Series B investor?
Yeah, I mean, we're investing at such an early stage right now, like pre-seed seeds. So it's a long time for us to finally get to that stage. But absolutely, there's a lot of really interesting secondary sites and markets that have popped up over the last couple of years that we would absolutely look at, taking some risk off the table and maybe reducing our chip stack a little bit if a company is doing incredibly well. Because I mean, I think that's where the real difficulty comes in as an investor, when you have a big amount of money sitting on the table, you've done well with the company, and it's like, okay, do I take some off, do I de-risk, and how do we do that, right? But you want to maintain some skin in the game to really take advantage of that upside if, like we were saying, things go public and it really blows up from there. So yeah, secondary markets are definitely something that we would look at in terms of de-risking investments if they really started to break out.
Have you guys officially done that before, or is it something that's, because I know it's relatively starting to get a little bit more common now that there's more options and channels out there?
Yeah,
but just curious how you build that into your syndicate exit strategy.
Yeah, not me personally at my syndicate, just because we are so new. We just launched last month. But there are some other syndicates that I'm an LP with that have gone on to sell shares on the secondary market. Impossible Foods is a good example of a company that I had invested in, and then they ended up selling some shares on the secondary market. So yeah, at the personal level, no, it's not something that we've had the opportunity to look at yet, but it's definitely something. Hopefully, if we get to that point with some really strong companies over the next few years, it's something we'll have to consider.
And then second question was, what are the typical terms that you offer in your syndicate?
For on the investor side of thing, or for founders?
Yeah, for your LPs.
The LPs, yeah. So we follow a pretty standard model. AngelList has the pretty standard model across all syndicates. So it's 0% management fee, 20% carry. That seems to be, there's some syndicates that have tried charging a management fee on AngelList, and it just really hasn't worked out well. There's also some syndicates that have tried to charge a higher carry, and it hasn't worked out well either. So we just stick with the industry standard 0 and 20.
And then is the AK admin fee passed on to the LPs? Because I think that's AngelList's structure, right?
Sorry,
because you're not charging a management fee, but there's an AK setup fee.
yeah, the setup fee, yeah, that's tacked on to the investment, and then it's prorated across each of the investors depending on how much they invest. So,
Gotcha.
yeah, so it varies depending on how much you put into the individual deal.
Cool, thank you.
No problem.
Yeah, I mean, that's something I've noticed. It's very much on a deal by deal basis, so varies tremendously.
Mm-hmm. Yeah. Yeah, absolutely. That's one of the reasons why I like the AngelList platform, is just because there's so much activity on there. You can join multiple syndicates. You know, there's no cost to join the syndicate. You can see deal flow. If you're a brand new angel, you can learn from some of the most experienced angels out there and really get a feel for what to look for, how to assess investments, and then yeah, just start to slowly making investments at your own pace and your own comfort level.
Absolutely. Yeah, I agree with you. Do we have any more questions or? All right, that seems like it. But yeah, I mean, before I hand it over to Sam, Matt, thank you so much. This was really insightful. And like, I'm sure if we ever go in that direction, we'll probably reach out to you for your further insights. And I hope, yeah, hope, like, have a great trip to Australia. It should be great weather there.
Yeah, thanks very much. Yeah, we got 10 centimeters of snow here last week, so I'm excited to get down to some warmer climate.
Oh, definitely. And have a safe flight there.
Thank you very much. It's a pleasure being here.
Absolutely. Sam, do you want to take over?
Sure. Thanks again, Matt, for sharing your awesome insights with us. I personally learned a lot, and I think that the people who weren't able to join us today will enjoy the YouTube recording when we release it on our channel. So thanks again, and thank you, Prasant, for moderating. I think this was a great session, and I'm looking forward to having more of these. Seems like there was a lot of interest on our various threads on startup investing in our Facebook group. So looking forward to more of these discussions.
Thanks, Sam.
Ask one more question.
Sure.
Thanks, Matt. I'm Wilmer. A little bit about my background. I've invested into. I've invested into one startup. As I don't know if it's a angel investing. I don't know too much about the difference between like a late stage versus angel investing. My question is for you at Allied VC. Like, how do you kind of qualify the people that you take on as investors? Like, what are the questions you're asking? What are you looking for, other than they have a little bit of money?
Mm-hmm. Yeah, so the good thing about the AngelList platform is they vet everybody coming in who signs up on the platform for accreditation. So they are accredited investors. So that's great. That's something that I don't have to And then when you do go to join the syndicate, there you hit the apply button, and then you can include a note there in terms of, you know, what you like to see as an investor, what type of value you might bring to the syndicate. And then, yeah, for the most part, when I get their application, I can then go in and sort of see what their background is, what their areas of expertise are. Maybe I'll look them up on LinkedIn and just see what their background is. And 9 times out of 10, I mean, you know, it's a value-added individual who's, you know, looking to invest. They're willing to step up and jump on a call with founders if they back a company. They're willing to, you know, roll up their sleeves and get into the weeds. So those are the types of people that I look for, people that want to be active investors. They want to do some diligence, they want to do some research and really be involved in the process and not just be passive investors. So yeah, that's who I'm looking for.
Okay, so I would just go to your website, or would I go to AngelList to learn more?
Yeah, you can go to the website allied.vc, and then under the investors tab, there's a button there that will take you right to AngelList where you can join the syndicate. But yeah, by all means, I mean, we're looking for LPs that can add value and love to work with startups. So by all means, if you're an LP out there and you'd like to join, we'd love to have you.
Thank you.
Awesome. Potentially getting some deals done. That's great. I think we have another question from Marco. Marco, do you want to present, or I can read it off to you?
Sure, I'll present. Hey, Matt, great discussion so far. So I have a question. How do you connect with pre-seed startups? Do you rely on a network to prospect investments, or do you, seek out folks, or just take cold calls? Like, how does that work for you?
Yeah, it's a little bit of everything. I attend as many demo days as I can. I'm always connecting with founders. I use LinkedIn quite a bit as well to network. Crunchbase is another great one whenever there's, new companies being listed on there. And then as well, I do, I'll try and do events like this where I can just get out and connect with fellow investors and fellow entrepreneurs. And it's just kind of that organic process where the deal flow starts coming in. And then I prefer to direct people to the website. It's got most information on there, and then founders can apply directly. There's a little form they can fill out just with some information with regards to their business and what they're looking for in terms of a raise. And then I'll get that directly in my inbox, and I try to reply to every single one of those within 24 to 48 hours. So that's usually the best way to get in touch with me.
Awesome, thanks.
No problem.
Awesome. Do we have any final questions for Matt?
Come to Vancouver, Matt.
I'll actually go to Vancouver tomorrow. So, but just for one night. I'm flying out to Australia on Wednesday. So.
Oh, okay. Okay.
Yeah. But yeah, no, Vancouver's great. They got a lot of really good stuff going on right now in Vancouver. It's a super exciting ecosystem. And yeah, I meet with founders from Vancouver all the time. We're just a quick flight across the Rocky Mountains here. So I think Vancouver is a really interesting place to be right now. Lots going on.
Seems like they've become like another Silicon Valley type. Like they built up a large tech hub.
Yeah.
Have Amazon's here, and Amazon's like leasing out big space here. Apple is leasing out big space here, and then Microsoft's already got a strong presence. They were talking about building a train from Vancouver to Seattle too.
Oh,
Like isn't it called a tech corridor or something like that? They want to call it.
Wow, that would be very interesting.
Hey, Matt, this is Lucy. So my name is Lucy. I'm from San Jose, California. I used to be with private equity with Bridge Bank, but now I'm on the other side where I'm more on the accredited investor versus in commercial lending with private equity, but I still have a lot of friends there. I think my question for you is that I have a lot of siblings who are starting to enter the private equity space, like whether from an accounting perspective or either with Goldman Sachs or with things like that. So what would be like your advice? Like, since they're kind of like dabbling their feet, I know like there are different aspects of it, but what would be your advice for the youngster?
Are they looking to get into VC eventually?
I think they're more in the private equity space. Since that's what I'm familiar with, more on the VC side of it. I did VC underwriting for like maybe a couple of months, and it was too much too much cash flow analysis and cash burn for me. So I went more on the private equity side of it. And so now a lot of my siblings are more in the private equity side versus the VC side. So, but if they were to ask me for like advice on the VC side, like what would be your advice to give them, or how do they get in, or where should they start, right?
Gotcha. Yeah, it's interesting. I looked at, for a long time, before starting the syndicate, I looked at joining a PE firm or a VC firm. And yeah, it didn't appeal to me. Like it seemed like a lot of work. And like you said, you really had to start at the bottom and work your way up and spend many, many years there. But yeah, I would encourage them just to get as much knowledge as possible especially around acquisitions, mergers and acquisitions if they can, because like we were talking about earlier, I think we're going to see a lot of acquisitions instead of companies going public in the next couple of years, especially now with COVID. We're already seeing a lot of mergers and acquisitions going on. So
Yeah.
I mean, the more knowledge and experience they can get in that regard, the more attractive they'll look to, you know, a larger PE firm or a VC firm down the road, or even if they wanted to eventually launch their own firm, just to have that experience and potentially participate and work on some of those M&A deals. I think that would be great experience to have as it pertains to VC.
Thank you.
Mm-hmm.
Great. We're coming up on our hour. Do we have any final questions? Now is your chance. All right. Well, thank you very much, everyone. Thank you, Matt, once again for sticking around to answer any and all of the questions. And looking forward to seeing everyone in the Facebook group.
Yeah, and thank you guys for putting this on, Prasant, Sam, and the entire team. I mean, these are the types of events that we need to just get more people involved in the process and get more people into angel investing and into the VC world and really grow this ecosystem. So thank you guys for putting this on.
Awesome.
Absolutely.
Thank you. Thank you, Prasant, for moderating.
Of course, yeah. Thanks, everyone.
All right. Have a great night, everyone.
Have a good one. Stay safe.
Stay safe.